Stocks ending the day a little change as investors wait on key data, including, of course, NVIDIA earnings and inflation data. And joining us now is Ken Mahoney, Mahoney Asset Management CEO. Ken, it's good to see you. So, after that Friday sell-off, we attempt to come back there, Ken, but then we sort of slide there into the close. Ken, I'm curious what you make of today's trade, the action you saw, Ken, and what do you see ahead?
Yeah, I don't think everybody would like it. If you're long, if you're short, that's a different story, which most people are not. Look, on Friday, I thought it was a perfect storm, like everything hitting at once. Some of the chaos in Washington, D.C. and slashing jobs and how's that going to show up investor sentiment? Well, we got that number as well. Walmart saying that tariffs are going to be something towards the second half of the year. Investors not liking that either. And, we had the OEX expiration to really kind of shake things up on Friday. Funny thing is, I thought it was somewhat constructive this morning or late morning when the market did go through Friday's lows, took out a lot of stop loss orders, looked like, and then rebounded. I'm like, oh, that's pretty good. And then we had this awful ending to the day. So, for bulls like we are, again, we expect escalators and elevators, escalators going up and looking pretty good. And then when it hits, hits like the elevator ride Thursday, Friday, and so far today, we can get a turnaround Tuesday. I think this is too far too soon. I'm still counting as bullish, but I hope for a turnaround Tuesday after we saw this kind of close at the low today.
Ken, we've been talking to a lot of investors recently who are diversifying, right? They're saying large cap tech is not the only game in town anymore. We got to look beyond that. I think, though, you guys are still looking at that large cap tech, or are you looking for it to fall even more before you want to get back in?
Right. So I think this is going to be a good year for tactical, putting some bids below, like where Microsoft's trading is one of our favorite ideas right now, coming off earnings down 40 points. And I thought their guidance was pretty good. I mean, you get all the verticals when it comes to Microsoft on top of it. NVIDIA obviously is going to be the game changer, hopefully Wednesday. So look, we're growth managers. We do have some JPMorgan, that's not a growth stock. We know less regulations, administration is going to benefit companies like that. But we are going to stick with the big tech companies. We still think this cycle is spent. We came in this year thinking 20% year over year for CapEx and data centers and all that stuff. It looks like 25, 30% when we got through the earnings, with Microsoft saying 90 billion they're going to spend and Amazon saying 105 billion. It's kind of like they're all reaching out there. So look, we're going to follow the money. We know this is like a Bronco. We know there's more volatility in the space, Julie. But at the same token, there's no other industry that's seeing hundreds of billions of dollars being spent in infrastructure.
I was interested, Ken, to get your take on these recent comments we got from billionaire Steve Cohen. Mr. Cohen speaks, people tend to pay attention and for good reason. And it was interesting, Ken, because it sounded bearish. I mean, the way he was talking, it was slowing growth and sticky inflation and the possibility of retaliatory tariffs. I mean, it sounded negative, and I'm just curious what you made of some of these kind of negative arguments you heard there.
Yeah, I mean, Cohen obviously has had a great track record, so you can't dismiss anything that he said. Over the weekend, you heard from Warren Buffett raising more cash, and then you start looking around like, what am I missing? What am I missing? Look, I think, this year, unlike last year, I think the biggest drawdown last year was minus 6%. Our newsletter to investors in January, right from the beginning, said, listen, we're getting a lot more volatility than the 6% drawdown. Get ready for it. But I think in the end, it's going to be worth it. And if you're tactical and you're buying on some of these dips like we're seeing right now, and you could sell, a portion into rallies, and we'll have our rallies, but it's not going to be an easy kind of index, kind of let's hang out, make 20% in the S&P 500 this year. We noted to investors, it's going to be a little bit dicey with the new administration or 2.0 Trump, however you want to call it. It's not going to be easy, and you're going to have to get a lot more tactical to make your returns.
Ken, we got NVIDIA earnings this week. Do you guys own NVIDIA? What's your positioning around that one?
Yeah, so we've been NVIDIA owners since, I'd say, summer of 2023. It's a long time, nice cost basis, have a nice cushion. Stocks trading at 131 just a few days ago, 141. We like this setup, to tell you the truth. We're coming in limping. I mean, I've seen other stocks, growth stocks like NVIDIA, and the stock is ripping into earnings, and it sets the stage for sell the news. I think this is the opposite. I mean, really, this has been a lot of negativity, concern about spend, concern about cycles, concern about Hellman, concern about, what Taiwan Semiconductor is producing, check and supply channels. But I think in the end, we're going to get a fantastic number. Remember, the CEO, they're not trying to get, a little bit more market share. They're trying to create new markets. And when I think about what they're doing here, I think, again, coming in, to limping this Wednesday, unless we get some rally tomorrow or Wednesday, is a pretty good setup for going long the video.
Ken, we did get more tariff headlines today, and so I'm just curious, as a market pro, as somebody who has to actually put money to work, how do you navigate that dynamic?
It's difficult. I mean, the volatility is not really showing up in the VIX, so to speak. It showed up a little bit when it's trading at 14, 15, and now here it is at around 20. Yeah, I mean, like I said, let's say a Bronco. The reason I say a Bronco wants to knock you off, it's not supposed to be easy. And there are periods of time, like after the election, with kind of the honeymoon for Trump, it looked kind of easy. But we're right back to where it is, mostly for investors, mostly for the markets. It's not easy. It's not easy holding on with tariff talk and so forth. But if you're dollar cost averaging in, and you're averaging in here on some of the best names in each industry, I think you'll be rewarded when we get some of this pressure off tariffs.
Ken, thank you. Good to see you.
Thank you. Good to see you.